Good afternoon and welcome everyone to Trading Trends, Monday, November 24th, 2025, ETF edition. Seems I may have ruffled a few feathers on Friday over some maybe crypto comments. Very not a fun day, and the Eagles lost yesterday to the Cowboys, so it hasn't been a very extremely fun 72 hours. But yeah, let's get into the charts here. We call it like we see here. We just read charts. Let's take a look at what happened. We've had some really constructive things going on in the market. Crypto is slowly following. We'll take a look at the charts and you'll see what I mean here. Thank you for joining. If you got a ticker or something, put it in there. It's been a lot of resilience in the market. You'll see what they were flocking to and where they're not. All right, so let us, there you go. So Q's big rally leading the indices today. They gobbled up tech. Some of these big tech companies, when you take a look, Google up 6%, Broadcom up 11. I mean, if you thought the AI trade was having, the wind come out of it, they had a big resurgence. Not all the names, though. We'll take a look. NVIDIA still, to me, looks weak. I'm not super convinced. We'll take a look at the critical levels, inflection point that the market is in. But the Q's rallied 2.7%. And what you love to see is the risk-off stuff. Staples had a nice drop today. We'll take a look at the chart. And volatility certainly came in. We will take a look at that as well. So without further ado, let's go to the dashboard panel and look at some big names here. I hope you guys are doing well out there. It got a pretty crazy end of last week, and we'll see what happens again in terms of the week. Wednesday's a full day. Thursday is closed for Thanksgiving, and then Friday is markets open till 1 o'clock. I'm going to maybe try and do a stock video tomorrow, and then the rest of the week, likely not. We'll get to the intraday action in a second, but before we continue, Tesla up 7%. We knew that wasn't going to stay under 400 for too long. NVIDIA up 2%, but it's still trading before where it was pre-earnings. So don't love that. To me, 190 is a big level for NVIDIA. If once that gets back on, it probably corresponds to something around 92 in Bitcoin, over 3,100 Ethereum. I know the momentum trade and the stories that have worked for the past year or so would be leading and successful. For me right now, NVIDIA is not convincing me. Google up a monster 6%. That's amazing. Broadcom up 11. A massive move. Absolutely monster. Meta up 3%. To Apple up nearly 2%. 1 2/3 to be exact. The small caps up 1.8%. Amazon up 2.5%. AMD up 5.5%. Palantir up a nice 5%, but still just to $162. Micron, what we've been calling a perfect stock, up 8%. We'll look at the right here, the IBIT ETF up 5.5%. Just a big day for those. Overall, below average volume in the SPY. We trade about 60% of average daily volume. So here's the intraday action. You can see from the green volume here, the green bar here at the bottom here, we had a nice strong start from the get-go. This black line that slices through my screen here is a 200 bar average, each one constituting 30 minutes. So this goes back basically to 5 days ago on one of this panel here. So we got above that at 10 a.m. I knew things were looking good. And then what happens? Always a good signal. We register overbought. See a little bit of the volume drying up from what already is a thin day, but that's okay. It propelled us to new highs on the day. We pretty much hit the high officially, at 1 o'clock. Came very close. Actually, hang on, 66974. We beat it 330, albeit very close by 20 cents. It depends on what index you were looking at. The Qs did it as well at 330. Small caps did it, I believe, a little bit earlier. But really, we got to that thrust at 1 o'clock and then held through it for the rest of the day. A little bit of selling at the last bar. So as we zoom out, more important, again, short week this week, usually bullish in terms of seasonality. But, the market's gone through a lot of things in the past week and a half. So as we zoom out, don't love this megaphone pattern. Don't like this lower low. You really want to see us stick the landing there at about 660. So I keep my, you got to keep your probabilities open. That's all we're doing here when we're looking at the charts is probabilities and patterns. You don't know exactly how much the player is going to score in the game. We think he's going to have a good game or a bad game, and that's what we're doing, analyzing the charts here. So now if we take out a prior low, and it's interesting, we exactly got to the bearish engulfing low on October the 10th, which was 653, and we got there. We clipped a little bit. We got to 651 on Friday. So don't love that. All told, those levels were first encountered in human history Labor Day weekend. So we're giving up, 3 months or so of gains. So back to where we are here, because I'm not going to maybe have a ton of updates in the near future, but I do see, again, we're looking at the charts here. We were totally early when I wrote about it in Chart Advisor. We thought the momentum was going to continue instead of having, the momentum trade had the worst week in 3 years last week. So some of this, Rigetti and a lot of those names, they're down 40, 50% from the peak. A lot of the Mag 7s are down 14% from the all-time highs. So a lot has been reset in a way. But again, the pattern here I'm looking at here is a lower low here. Don't love that. The big level for me is 670. Yes, we got very close to 669 today. To me, 670 is the level. I want to see us close there at least a day, 2 days. And if that should hold, I do, in fact, believe we are still headed for new all-time highs in mid-December. That's what the chart's looking to me. You got a beautiful rise 200-day moving average. 670 is the 21-day exponential moving average, and that would correspond with crossing 50 RSI. It would let me know that the momentum to the downside in terms of velocity of selling, I think, would be over. And that would be it for there. And then the next tussle you would have in terms of the markets would be really 685 and the new all-time highs. And I don't think going into the Fed meeting, should you get that cut or even a slightly friendly dovish Fed, you will get those new all-time highs. So again, in terms of cycle work, it's a little bit nasty because of how much of a drawdown we had there. But I'm still looking for mid-December, probably a week or so after that Fed meeting, for new all-time highs, potentially sooner. But again, 670, where we are very close, within 1.5% of where we are today. So tomorrow is important, and going forward, very important week and a short week. So it's an interesting backdrop. Let's see what constructively they got into today, because I think it is encouraging, and they're buying what you would want them to buy at a time like this. Pretty interesting. We always go through multiple standard deviation movers, and there's only one to the upside. You think on a massive day where the Qs were up 2.5%, there's actually one multiple standard deviation ETF that rallied, and it was this QQQI. It's the NEOS Nasdaq 100 High Income ETF. It's very similar to Qs, but it is a little bit more heavy in Nvidia, Apple, and Microsoft. You can see it's an interesting chart. We'll use it for the purposes of why we were looking at it. Multiple standard deviation move. Pretty reminiscent of course, the Qs, but we'll look at this for what it's worth. The 200-day moving average stands out to me. It is a brick wall here at 51.68, and it's been since for the past 5 months here, going from the beginning of summer. Similar to S&P, we're about to cross 50 RSI. We're at 48.5 here. And interesting, look at the tag there, or the Friday afternoon ugliness lows. We tagged it. Actually, we got within 4 cents of it, and that is the closest. And I did it similarly in August 20th and also August 1st. So this seems to be a very good proxy for the Qs in the broader market. Of course, this peaked on November the 3rd at, call it, $56. You have a wall of support here at 51.70, and voila, immediately you're here at 53.90. The big level for me here, again, it's going to be just a couple of hairs of where we are, similar to what I just said with S&P. I want to see continuing strong closes in this ETF today, up 2.5%. This has to successfully close above 54 and gather momentum from there. So it's very close. It's 10 cents away. I want to see how it closes or how it trades tomorrow. Very bullish candle. I think the short week, possibly help. You get Black Friday numbers maybe early. Who knows? But the market was very volatile. I still want to see this. This is really at the center of where the action is. And if it does hold 54 for, say, 3-4 days consecutively, it gets above the 50 RSI, I do think the sell-off would be behind us. And then for this, the new highs, the prior highs are at 56. Yeah, this looks like it would head to 57, if not about 57. Yeah, same thing, in about mid-December. So just a nice, reset. Again, this, you see a different kind of a megaphone here. You see a basing. This one's a little bit more range bound. You see the breakout 52 to 54. Then it goes to 56, and then break down to 52. Overall, though, still pretty healthy. It just spent some more time under 50 RSI. So this is the ETF that actually moved in a standard multiple standard deviation fashion. I thought it was pretty interesting. Also, no reason to play this at 1.25 speed because I talk pretty quickly. All right, number losers to the downside. There were two. You'll love to see this. Volatility down 7.25%. The number we've been talking about is 38. Once I see this hit 38, I know some traders use UVXY. I like VXX. As soon as it hits 38, to me, I typically know that the fear is a little bit overdone, and then this is about to puke. What happened here was I was right and wrong, which is pretty typical, I guess. On the 20th, it went to, call it, $40, $39.70, and then we got to 40.5. You saw that rejection at 40.5, and then voila, where are we today? At 34.60. The forecast for VXX would be exactly inverse of what I'm saying for S&P. So I think this is going to have a nasty 2 weeks, but I do want to see this. It's basically what I'm saying about successive closes above certain levels in the S&P and Qs, or that specific QETF. This one has to break down. I'm talking a significant breakdown. I want to see it break down under 35.5. So far today was a good move. We're at 34.64. I want to see this continue to hold. So this one's already has a little bit of breather to me. I like this due to the plunge it had of 7% today. So as long as this one continues to hold under 35.5, I do think this is headed to about $31. The 52-week low, I believe that's the all-time low in VXX, is 31.84. So yeah, I do think you'll get very close to new all-time lows in VXX in about 2-ish weeks. As I said, yeah, the video from the week before that horrible Friday was a global, it was very bullish the world. And then, the following week, markets puked, but technically held in where they had to. So this is the update on that. Like to see volatility where it is. I think that was a near-term top here. Like to see that also tagged there at 41 both times and then drop lower. Hasn't been above that since early August. And the other thing that they sold, multiple standard deviation, only one other sector or one other ETF. It was staples, and you like to see that because for the most part, staples it's not really an AI trade. It's pretty much risk off defensive, and it was down 1.2% almost, and that is a big move for staples. As we look for the chart here, this peaked back here back in March, and as you can see, has really, really fell out of bed as of the end of August. Once that $81 started, breaking, this is really just too much. And a 52-week low, a fresh 52-week low for this just on November the 6th, where it pierced $75. This looks like an overbought sell to me. This is another signal I like for bullishness for the S&P. I think this is going lower over the next 2 weeks, not massively, but this looks like it's going to $75 right around there, which would be a new 52-week low. I think it's going to come very close to that, somewhere around 75 to 75.5. So this looks like it's in the penalty box. And I like that rejection there on Friday of 78.40. And then it got to Dikembe, and here we are with moving average going lower. This is an interesting for me, nice backdrop of the overall to be bullish the market, which is not beta represented in this XLP staples. All right, let's see what has been working the past 5 days, because there obviously have been some scares and ups and downs in the market depending on where you are concentrated in. Your number one winner, and congratulations, hats off to Kathy, Miss Wood, 12.5% for ARKG. This thing has been absolutely killing it. The best exchange traded fund in all the land belongs to you, Miss Wood. This thing's up, nearly 3% a day. Today it trumped that, up almost 5%. It peaked on October 20th at $34. Look at these candles here from 26 to 30 in just a handful, when the market, the S&P was fine, but you saw healthcare obviously move up to new 52-week highs today. IBB and XBI are making 52-week highs. ARKG seems like it's inevitable, and it is going to do the same. Also, what I'm talking about in terms of the S&P, obviously just visualized here, want to see it get above and close above its 50 RSI, and that's exactly the thrust that you see here in ARKG to get the concentration of the moving averages here, say for this specific ETF, 2857. That's what I'm trying to, I foresee happening in SPY. But this ARKG here looks just an absolutely monumental mover. Is there juice left in it? Hang on. My screen is collapsing. Also, look at the breakout in the meantime right here above 2660. True strength rose above that the following week at the end of September. Dropped to that level. New 52-week highs. Dropped to that level again just last week, and then a spring forth above. So we're talking about it because it is the best ETF in the past 5 days. If you were holding this, you absolutely had alpha return to you to the tune of 12.5%. In terms of going forward, it looks like a great, obviously, reversal buy. I think this has a little bit, to me, I think this, look, once we got to 31.5, possibly 32. Like I said, the XBI and IBB cyclical, very similar proxies are making 52-week highs. For this one, that would be represented by 34.06. I think it gets very close to that. So I think there's still more to it. Look at these candles too. They are rushing into this at the end of the day, closing at the top of the candle each time. Don't forget, just 10 days ago, this was $26, and it looks like it is headed for about 31.5 to 31.75, I would say, if not higher than that in the next week or so. It's already had a great run. I think it still has about another week or so to continue. All right, number two. So they're buying ARKG. Biotechs, are not, last I checked, super defensive. Healthcare is, biotechs not super so. Second thing that they're buying, this was a point of calamity for the market recently, and we'll talk about it. Regional banks up 5.5% over the past 5 days, averaging almost 1%. Today, a digestion day, up almost 10 bips. So still not giving me great warm fuzzies here. This to me looks like it has significant resistance at 62. I know it's shorter term. It was above it as of early mid-October, but I would say the environment changed a little bit. The 200-day moving average is starting to slide a little bit, albeit by about a penny a day, 2 pennies a day to the downside. This to me is a kind of a nasty chart because it's essentially range bound. I think this one lives between 62 and 58. Thing that jumps to me, especially if you think the VIX is going to continue to slide, is selling strangles on it. Position size it accordingly, of course. But 58.62s, I think it will be inbound. Again, rising tides will lift all ships. This likely has more upside risk that it goes for just about 63, if anything. So again, but I still think this will be tethered to just around $60. So frustration in the regional banks, but good to not see them totally falling out of bed and getting a 57 handle. And the third area that they've been buying for the past week, so it's been ARKG, it's been regional banks at 5.5, and then home construction. So that's a good collection. That's what you want them to be doing, basically. Today was down 50 bips, was home construction. Look at it get to Kembe to the 200-day moving average. It's been really an important marker for the home construction, especially since mid-October here, since it's been dealing with this oversold environment. So right here, we're talking about it because it's up 4.5% in the past 5 days. I think this continues to go higher. I think this has about another week, 10 days to go until it hits its head on that 102 resistance. So this to me has about another $4, almost similar to me, not really exactly regional banks, but this to me looks range bound as well. I think this will spring higher as high as 104, but I would not be betting on that. A lower bound. I think this was an overdone here. But again, this group has been far out of favor under 50 RSI since September 18th. This has been 2 months in the penalty box and now under its 200-day moving average for 3 weeks. So, more so, almost like a dead cat bounce here. I do think you'll get a move to about 102, 103, and about another 10 days or so bullishness, probably coinciding with the Fed now 75% chance 25 bit cut in the next meeting. All right, let's look at the losers of the past 5 days. What has been absolutely crapola? Number one, volatility. So that's a great, I include it because of what the signals are. So volatility, your number one loser, down 4% over the past 5 days. That's absolute net. So today was down 7 when we netted out. So from 5 days past, down 4%. I already gave my forecast, so I'm not going to go further on it, but love to see that. I think this is headed to about $31 or another, $3.50 lower from here. Volatility, so that's about, more than 10% lower over the next 2 weeks or so. What else were they selling? Of course, the point of my frustration on Friday, crypto. IBIT here is the second worst ETF after the volatility. So basically the worst performing ETF in the past 5 days, worse than Ethereum. It is down 3.2% with today's big 5.5% rally. So, oh boy, let's get into it. So here is the IBIT chart. Similar when we look at South Korea, Bitcoin, Microsoft, sugar, lumber, you look at overstretched levels, rubber band type theory. So when you see this here, again, the 200 moving average, we'll look at big things that are standing out here. This group, Bitcoin specifically, has been absolutely in the crapper statistically since October 9th. I'm doing that based on under 50 RSI trading. And unfortunately, that came 3 days after the all-time high, corroborating with Bitcoin of 125K roughly. So unfortunately, they have been saying sell into any type of strength. You got strength on October 27th when this got to $65, and it really has done the slinky going lower and lower ever since. I would like to think that the 200-day moving average is a brick wall here at 59, but you obviously notice where we are. It's 50.5 close today. But look at this. You get two hammers. This is kind of a doji, but you get almost, I'll call it, it's a doji, but you get this hammer in a row, and you see this heavy resistance up ahead. So now what? Good news and bad news. I think we have a upwards trajectory of 2 weeks for Bitcoin. For IBIT here, I'm looking at the 56 level for it to get to. So good and bad news, $56 from here is another, $5.50. So that is a beautiful move. That's 10, 11%. We shall be fat and giddy. The problem is those all-time highs that are here, I think we're going to, really exert a lot of energy, specifically from IBIT, to get from 47 to that 56. I think that's going to be pretty exhausting. We'll see if the backdrop of maybe S&P getting towards its all-time highs and the Fed cut easing liquidity will ease the picture for Bitcoin. But again, it's IBIT for the first time in its history being oversold. I can't believe BlackRock let it happen. No, I'm joking. But I do think this gets to 56, like I said, over the next 2 weeks. It'll probably frustrate because that's how this period has been. And it seems like the sentiment in crypto is still crap. There's, different levels of Michael Saylor getting liquidated and JP Morgan losing money, et cetera, on them not being included in the S&P 500 for strategy. So don't overall love the wall word that it has, but once it gets above it, if it does, obviously it could climb. But for levels for IBIT, 56 is the level I'm watching. That's where I think it gets to over the next 2 weeks. And then ultimately, this looks so heavy. Even if it gets above the 200-day moving average of 59, and we hope it does, it is going lower, so I don't love that. And again, we haven't closed above the 200-day moving average since November 4th. So this has been a rough 3 weeks for Bitcoin, absolute weakness in crypto. That's been, again, and the upper level of resistance for this to me is 63.5 to 64. So the all-time highs here at 72. I'm not looking at that right now. So 125 corresponding with Bitcoin. That's shelve that. God bless you, Tom Lee, and your 200K call for end of New Year's Eve. I don't know about that. It's crypto. Crypto's going to crypto, but that's a heck of a move. I'm looking at those levels. Okay, and then number 3, big loser of the week. So if you got hammered, if you were long volatility, if you were long Bitcoin, and if you were long South Korea. South Korea down 3.2%, but look at this, trying to stick the landing here. This is one of the absolute best leaders of the past year. This is moving like it's a gold miner or like Bitcoin used to. But I actually just typed GDX in the other screen because that's what the chart reminded me of. But this looks absolutely incredible. I don't think they're going to keep this under 50 RSI for too long. I love entries if the backdrop obviously supports, but this looks like you're in a good place. I love entries in this, honestly, under $92, which is $1.50 away from here, or another about 1.5%. This has only been overbought all year. The lows and oversold only came here on April 8th when it touched $48. You can see the massive move it's had all the way up to 100, so more than 2x. Great flows into this since especially the summer, chasing this into the close. And I mean, really, about 42 RSI from April. So my God, amazing chart. What more can you say? And my target for about 2 weeks from now is 100 even, which is basically coinciding with its 52-week high of 100.78. So very close. Be careful just buying calls. It's not quite that environment yet, although it can pay off. You might want to look at something like February. EWI is not super liquid either, but something like the February 100 calls I don't think are horrible if you think the bull market globally will continue after getting that ugly reset it had. So top 3 trades of the past 5 days. Are things so hideous? The best 3 trades of the past 5 days are long ARKG, risk on. People are getting cracked out on biotechs. Long regional banks, maybe the fear is over there, and the regional banks won't lose a lot of money on lending out all kinds of money. And long home builders, maybe they're sniffing out a potential rate cut now from 25%, not going to cut to 75%. They are. So Fed likes easing of course, more certainty. All right, we'll see if we have one tomorrow. If not, happy Thanksgiving, y'all. Gobble, gobble. Peace.